episode of Crypto Hustles Market Update, where we're going to go over Bitcoin, blockchain, and everything having to do with the cryptocurrency world. Welcome, Rocky Crypto Hustle. How are you today?
I'm doing all right. I'm doing all right. How are you doing?
I'm doing good, really good. A lot of exciting stuff going on in the blockchain world and Bitcoin. It's has real energy right now. I think a lot of things in the works. So I'm glad we're starting this show with you, and we get over some of the basics, and then later as we go on, we could get people's questions because I'm sure there's people that have a lot of questions about this topic.
Absolutely, absolutely. We're definitely in a new paradigm shift as technology is evolving. So it's very fascinating and interesting to be in the trenches or in the front line of this movement.
Yes, definitely. Okay, so first, real quick, for all the viewers and people of Minds and even other people outside of the Minds community, let's go over some of the basics because I still think a lot of people don't know the basics of Bitcoin, and I think this is where we should kind of help focus it a little bit more. So, just what are Bitcoins?
Okay, so the best way to describe Bitcoin is it's an open source ledger, right? So just like, you have units, dollars in your bank account. These represent credits in your bank account, but it's controlled by the banks, right? And it's controlled by their centralized servers. Right. So when you go into your bank account, it's just units sitting on their servers. In fact, they're just IOUs sitting on their servers of checkbook money that they owe you, right? It's not even like tier one money that's created by the central banks or whatnot. Generally, commercial banks are creating another form of credit or money, but that's another story. I digress. So, Bitcoin, on the other hand, is an open source ledger that's not controlled by a centralized server. And the units are actually controlled by the individual, so you don't need to go through a third party, right? When you go through a third party, there's a lot of trust involved. If they default, or if they happen to go bankrupt, have some kind of liquidity crisis, like what we've been seeing in Greece or in Cyprus with things like bail-ins, then you won't get your money. And then when everyone tries to get their money at the same time, there's not enough money there, and then you have a run on the banks. Whereas with Bitcoin, every unit of value that's locked onto the blockchain is accessible by the individuals who happen to own the private keys of those units or of those coins, right? So as long as you keep your private keys safe, no one can mess with your money. It's only you can control it, and you can access it at any time, and you can spend as much of it as you want, and you're in the driver's seat. You completely cut out the third party entirely. And so this network, it was created through the cypherpunk movement. For those of you who don't know who the cypherpunks are, it's a hacktivist movement of I guess you could say crypto anarchists that developed in the 90s using cryptography as a means of protecting our privacy and liberty, right? Because technology is a double-edged sword. Technology is something that can liberate us or something that can destroy the world. It depends on how we use it. And so Bitcoin came as a result of this cypherpunk movement, and it was invented in 2009 by a mysterious figure named Satoshi Nakamoto. Nobody knows who he is, and basically, is the first. They've been trying to work on this model of a digital decentralized currency or cryptocurrency for a while. But the problem that they've always encountered is, how do you create digital tokens that you can't copy or counterfeit, right? How do you not double spend digital tokens? Because as we all see with things like file sharing, like torrents and things like that, it's very easy to create copies. And so this is the blockchain. What the blockchain has to offer is that it's solved this problem, right? And so the blockchain is, for those who don't know, is the ledgers. It's the name of this ledger is called a blockchain. And the reason why it's called a blockchain is because you have all these miners, they're called miners, is basically people running these specialized computers. And their job is to solve a complex math problem to essentially confirm transactions on this network. So let's say there's a whole group of us. We all send a bunch of transactions right now, Bitcoin transactions. I send some Bitcoin to you and vice versa, all this stuff. These miners are all racing with each other to solve this problem. As soon as a problem is solved, it's almost like winning a lottery. They do this by throwing out these alphanumeric codes, billions per second type of thing. As soon as it's solved, a block is solved, and what happens is a group of transactions that happen on the network get bunched together into a block of transactions, and they get stamped on the ledger. And then the math problem evolves based on all previous blocks or all previous transactions. So it's a math problem that's always moving forward. This is why you can't like reverse transactions or go back and change the ledger. It's an unchangeable ledger, right? Which is more than what we can say for most centralized ledger systems that we have today, where information can easily be hacked or doctored, right? Many hackers in the world have tried to hack the Bitcoin blockchain, and it's the most secure blockchain in the world, the most secure ledger in the world. And so and every time a miner solves one of these blocks, they're rewarded with a creation of new Bitcoins. Bitcoins are hard capped. There will only ever be 21 million of them. There are close to 16 million now. And coming up this summer, these mining rewards are going to get halved from 25 to 12.5 because they get reduced every 4 years, the rewards. It started off with 50, went down to 25, 12.5, so on and so forth. And I believe the last Bitcoin will be mined in the year 2150. So the beautiful thing about the blockchain and this monetary system is, for one, it's open source, so everyone can see the code. Everything on the network is transparent, so everyone can see all the transactions. Yet at the same time, it provides a level of privacy to individuals because you don't have to necessarily attach your name or ID to any of these transactions. And there's ways to even obfuscate or hide Bitcoins type of thing, or who owns what. So all of this becomes possible. So it's a really, as far as I'm concerned, it's a perfect money system, and it's something that people have been waiting for a very, very long time, because the banks have been running a monopoly on creating money it's one of the oldest monopolies on the planet. So
Yeah, I think that's also too what's really important about this whole Bitcoin blockchain, and I think that the average person doesn't really realize is that it's not it's that this way of running a system is better. It's going to make what we have already, in the economic system, but it's going to change other things too. But it's because it's going to make that stuff obsolete. Like, this is more secure, it's more efficient, and it's just overall a better way of running the economics and business, and even what we're going to get to later is about the social aspect of it. How it's fascinating what's going on in the whole blockchain world. So, but real quick too,
mhm.
how does one start using Bitcoin, like setting up a
Well,
wallet and all that stuff?
okay, well, the easiest way to get your hands on some Bitcoin is to purchase some. Mining is incredibly difficult. It requires specialized computers now. It used to be that you could just mine them off your laptop back in the day, and then it went to graphics cards and so on and so forth. But now it's what's these ASICs, which is these application-specific integrated circuits. They're these little supercomputers, really, whose sole purpose is trying to spit out as many hashes as they can to solve these transactions. So mining is really not the way to go about getting some Bitcoin. The easiest way to go about getting some Bitcoin is just get yourself a wallet. If you want to experiment, you could play around with faucet sites to try to get some small amounts of Bitcoin. Although I'd have to say that you're probably going to waste a lot of time, because you'll spend maybe like many hours trying to get Bitcoins, and maybe you'll get a penny's worth, right? So I don't really think it's worth it. They do it as a way of making money through advertising, stuff like that. But I would just say go out and buy some, right? So you want to make sure that your computer is secure, though, because the thing with Bitcoin is not only does it give you more freedom, but with freedom comes responsibility, and it means you are responsible for securing your own money. So if something goes wrong, there's no one you can call. You can't call big debt government or your bank or whatever to help you out. There's no insurance. There's nothing like that. So you're in the Wild West, right? This is what freedom is. It's the jungle out there, right? And you have to be very, very careful of scams, right? Like, don't go out and invest your money in these schemes that say they're going to give you all these crazy returns and stuff like that. These investment schemes, you see a lot of people get scammed, and if you don't keep your private keys secure, that you could lose your money. So I'm just going to warn you now, like, just make sure that everything is secure. But once everything is secure, and the way to do that is, you could get yourself either like a little hardware wallet, or, and if you're just playing around and testing with small amounts, like before you even have to worry about all that, I'd say just go out and buy yourself like $20 worth of Bitcoin, right, to play with. You can do that from a variety of services. You can either buy them off the exchanges, but then there's companies like Coinbase. Coinbase is like one of the largest Bitcoin service providers in the world. They have an easy hot wallet. You just want to make sure, one very, very important thing if you're going to go with a wallet like that, is you want to make sure that you have what's called two-factor authentication, which is essentially, it sends you either an SMS text when you want to log into your account. You have to put in the code. It's like a secondary password, or you use an app called Google Authenticator. It just keeps on generating a new code every couple of minutes. This is an absolute must with any online wallets, because there are many hackers trying to crack passcodes and get into people's wallets and steal their coins. If you have two-factor authentication, they actually have to physically control your phone in order to get access to your account. So it's a secondary layer. It's a must. I know for some beginners, this might seem like a lot to wrap your head around. But I guarantee you the journey is definitely worth it. It is worth the effort. It's almost like, cryptocurrencies, you can consider a meritocracy. It is not for the lazy. I will tell you that. I mean, if you just want things to be handled by a third party, or just other people make all the decisions for you and to control everything for you, and to give you a daily spending allowance and whatever, and continue on this parental relationship well into adulthood, then crypto is not for you, right? Crypto is for people who want to take responsibility for their own reality and are willing to put in the time and effort to be able to explore this fascinating journey, because it is a form of self-governance, right? And self-governance means you also have to be autodidactic, which is to self-educate. And, and if you're not like that by nature, for whatever reason, but you're still interested, I just suggest put in the effort, change your habits, because it's worth it.
Yeah. That's definitely something that's really important. Like you said, with freedom comes responsibility, and ultimately it comes down to your own responsibility. And it's kind of hard because we've been kind of grown up in like a system where big government, big daddy takes care of us, and they don't want us to kind of take out on our own. So that kind of goes into uh, let's go over kind of misconceptions about Bitcoin, because there's a lot out there, and I think that's part of the reason, because I think Big Daddy kind of is afraid of this really exciting thing that's happening.
Yeah, there's definitely a few misconceptions. I've heard misconceptions on both sides of the camp. I've heard it coming out of the mainstream media, and I've heard some coming out of the alternative media. I'll address the mainstream ones first. So the two big memes, I would almost call social engineering memes, that you hear a lot in the media. You don't so much hear them anymore because, you know, all those naysayers in the media, they're starting to wake up because now all banks are getting into blockchain, but they want these private ledgers, right? Um, but what you see here a lot is you see here Bitcoin compared to tulip mania, to this Dutch back in the day. I think in the 1600s they had a big tulip bubble, and just there's this conception that Bitcoin is just some crazy fad or bubble, some hype of some worthless thing that people are just, cultish about, and so on and so forth. And that's how like a lot of mainstream investors see it. But they're kind of missing the point, because for starters, it's it's yes, you can have Bitcoin bubbles as a trader. I realize you can have bubbles, you can have over exuberant markets for sure where prices are exaggerated. Traders like to make a lot of money off of that, but it doesn't mean just because the markets go through their cycles doesn't mean that the underlying technology and the value proposition that Bitcoin is offering is necessarily just a hype or a fad. It's a paradigm shift, right? Another misconception I hear a lot is they calling Bitcoin a Ponzi scheme. People seem to think that Bitcoin is a Ponzi scheme, or some people seem to think this because because Bitcoins are scarce, capped at 21 million. Obviously, early participants or early adopters get in cheaper than later participants. And the more participants who come in to use Bitcoin, the higher the price will go, right? So, for example, we've got like 15 or 60 million Bitcoins right now, and maybe a few million users. But if you were to suddenly get 100 million users, then there wouldn't even be enough whole units of Bitcoin for each user, which is not a problem at all because one Bitcoin is divisible by 100 million. The price of a single Bitcoin would go up dramatically. But this isn't the definition of a Ponzi scheme. They're trying to call that a Ponzi scheme, but that's not a Ponzi scheme. That's just basic supply and demand economics. You see that with shares. You see that with gold. You see that with the money supply. You see that with anything, any product, right? Um, what a Ponzi scheme is a Ponzi scheme is as a financial scheme where old investors are paid dividends with funds coming in from new investors. Now, I don't know about you, but I haven't received a single dividend payment for owning Bitcoins, right? There's no centralized authority who's issuing out dividend payments to Bitcoin holders, right? I'll tell you what actually resembles a Ponzi scheme. Fractional reserve banking resembles a Ponzi scheme because the end result is the same. How does fractional reserve banking work? All interest on old debt is paid with the creation of new debt, therefore inflating the debt bubble and the money supply, right? The end result is the same. The reason why a Ponzi scheme is a scam is because it's revolved around debt. It is impossible because of market saturation, and the reason why it's shaped like a pyramid, similar to a pyramid scheme, is because you reach market saturation. There are only so many humans on the planet. Therefore, you cannot infinitely recruit new users. This is also why multi-level marketing doesn't really work. I mean, it works for some people, but for the majority of people, it doesn't work. If you look at the base of any pyramid, 50% of the pyramid is at the bottom, is at the bottom layer, right? This is why Ponzi schemes don't work, because it's this debt cycle where everyone's owned and everyone's promised dividends. So for example, if you pay into a Ponzi scheme and they say, okay, invest X amount of dollars and you're going to make 100% returns guaranteed. Well, you can only get those 100% returns as long as there's enough recruits below you that are going to pay you money to give you your 100%. So everyone who joins is given a promise to pay. So it's a debt system of making X percentage of returns, but it's not possible. And therefore 50% of everyone's going to get scammed, right? It's a big debt bubble. The end result is that it's impossible to pay the principal debt or the debt at all. With fractional reserve banking, you have the exact same thing, whereas you have old debt, which is paid, the interest of old debt is paid with the creation of new debt. It's impossible to pay off the entire debt. So what happens year after year? The debt cycle, the debt bubble just keeps on growing bigger and bigger and bigger as they continuously pump more debt instruments out into the market. And this is why when you look at the stock market, it always has to show exponential growth. And anytime it has a major market correction or a bear trend every 7 years or so, everyone pours dust on their heads, and it's like this big economic collapse because that massive debt bubble, that growth bubble, is threatened. It has to continuously grow in order to survive. If it stops growing and it starts to contract, the whole thing's going to pop, right? So, the financial system as a whole very much resembles a Ponzi scheme. And even in the stock market, you have things like naked short selling, where they borrow stocks to short on the market without actually having borrowed them, because it's all a credit system and there's like a 3-day delay in settlement. So anyways, so Bitcoin is definitely not a Ponzi scheme. Another misconception, and in fact, it's the opposite. With Bitcoin, you actually get real units of value locked on the ledger. No debt is created off of those units, and you are in full control over them. And anytime you want to access those units, as long as you have your private keys, they're always available to you. There are no IOUs. So that's Bitcoin. Another misconception that you hear a lot, it's a new one that the banks have been really pumping out the past year, is this misconception about private blockchains. Like the word Bitcoin is some dirty word that banks don't want to touch, right? Well, of course, because, Satoshi Nakamoto says in his white paper opening line, basically says a peer-to-peer financial, or sorry, a peer-to-peer money system that can be used without the use of financial institutions, essentially. So they have this whole narrative of private blockchains are good, public blockchains or Bitcoin is bad, is dirty. But you know what? Private blockchains, okay, yes, it might be more efficient technology as from a security standpoint because, the SWIFT system's already been hacked twice recently, and they're having a hard time keeping it secure with their firewalls and all this kind of stuff. So they need an immutable ledger, a really secure cryptographic ledger. I have no problem with banks and financial institutions wanting to upgrade their technology. It'll also increase settlement time. It'll make settlement times instant so you don't have to wait several days. It's great, but don't trash talk the roots. Don't trash talk Bitcoin and don't say, blockchain this, blockchain that, because you know what? Bitcoin invented blockchain. Blockchain came from Bitcoin. And because Bitcoin is open source and they didn't patent it, it means everyone can use the word blockchain, but it's not their word and it's not their term and it's not their industry. So they should pay respect to the roots. So that's another misconception with private blockchain. Now, as far as the alternative side, I haven't heard this one as much, but when I first came on Minds about a year ago, I heard this a lot. When I started promoting some Bitcoin stuff, there's some people kind of trolling me, basically saying, "Oh, Bitcoin's the mark of the beast." It's just a secret. It was controlled by the Central Intelligence Agency or not NSA to get us all using, digital money and to get us off of the money supply. And there's a war on cash. And you know what? I absolutely agree. There is a war on cash. And absolutely agree that the system would love us all to be digital because they can track it all and control it all and all that stuff. But the problem is that not everything that's digital, not everything that uses that kind of technology is equal or the same, right? Bitcoin is open source and it gives individuals granular control over their finances. And not only that, but let's say Bitcoin got co-opted or hijacked or was created, hundreds of other altcoins out there. They can't possibly be controlling a system that allows individuals so much freedom. And, I like to say that to some naysayers that say that, I say, well, what are you using? You still using credit cards? You still have a bank account? Because we know 100% that those digital units in your bank account or credit card are controlled by centralized parties, and they offer you very little freedom or self-control, right? So, given the options, I'd say Bitcoin's definitely a better option.
Yeah, I've heard that one too, and it's recently too. One of my friends, when I was, I think, putting something up on Minds, and then he was like, "Well, it was like just a thought. What about if this is what they want you to do?" And kind of that same old thing. And I'm like, uh, there's two major components: open source and decentralized. And
Exactly.
open source means open source, and decentralized means decentralized. Those are not compatible with each other.
Exactly, exactly. Like if they did create this and give it to us, they basically just gave us the keys to our own
Free,
freedom,
yeah.
really. Because you and I could just, create our own blockchain
Blockchain.
and cryptocurrency right now,
Yeah.
right? And are they controlling us? Are they our
Yeah.
puppet masters? Like.
Yeah. Like you can only go so far down that rabbit hole, and then Oh, okay. So let's wrap it up with what are bitcoins currently worth on the market right now, and kind of go over that.
Okay, so Bitcoin's worth about 453 American dollars. The markets are really interesting right now because, they last year. Okay, so I'll give you there's a bird's eye view of the markets essentially. So, we had the Cypress bubble, basically when the price went up to like 263, and then it came crashing down to 80, and then it ramped all the way up to $1,200 the end of 2013. And after that, we've been on this long bear trend because obviously that was the markets went parabolic and it was over exaggerated. We've been on this long downtrend, 2014. 2015 was very stable. We kind of consolidated and went sideways, basically between two to 300 US. We did have a couple of double bottoms at around 166. But then at the end of last year, around November, boom, it doubled in price. We had basically hit a peak of 500. Since then, we've had a bit of chop, but on the markets, we have this massive 5.5-month symmetrical triangle. And that recently shifted several weeks ago to an asymmetrical triangle. And we're testing resistance right now because the mining rewards are getting halved this summer, which means that inflation is going to be reduced from 9% to 4.5%, which is going to be less selling pressure on the markets. Everyone's expecting a really bullish pop. If we break above prior resistance at 475, then expect the price to go to at least 650 US. So, anyone sitting on the fence, I'd say now is definitely a good time to get your hands on some coins.
Nice. Cool. Very. So this is gonna wrap up the first part of the show, and kind of like the intro to everybody. And for everybody out there too, that's gonna listen to this and hear it, start asking questions. Whatever questions you have, we're gonna do this every week. So we'll compile some questions to ask Crypto Hustle. We'll go over more of the basics, more of what's going on in the market. So I like to thank you for coming in, and I think this is going to be a really exciting show that we're going to continue to do.
Oh, absolutely. I'm very, very excited. And I love it when new people ask me questions about cryptocurrencies because my mission is to increase user adoption and empower people and give them the tools that they need to do it right, because when you stumble, yes, you could be autodidactic and there's a lot of self study and learning in this, and there's a lot of pitfalls and mistakes. And if I can guide people to avoid those pitfalls and mistakes, I've even made some of them, and save people from losing money and actually having an enjoyable experience, then that's very satisfying and rewarding for me. So my website is cryptohustle.co. Debunking.com. On this website, there's all kinds of guides on how to get started with Bitcoin, and I also put a special emphasis on the markets. So it's geared towards beginners, crypto enthusiasts, investors, and traders. CryptoHustle.com.